On today's hot sheet, I'm discussing Zillow's October housing market report, the NAHB Wells Fargo Homebuilder report for November, and mortgage applications for the past week. Today is Wednesday, November 19, 2025. I am Byron Lazine, and the hot sheet starts now. Live from Naples, Florida. Welcome into the hot sheet. Let me know wherever you may be, where you're tuning in from today. All right, Zillow's got a report out. And listen, this is going to upset a lot of people online who want to ride that narrative every single day that everything in the world is too expensive. We need to tear it all down and start giving things away for free. We can't let investors buy homes anymore. Investors are bad. They're bad people. They're out to destroy, young people's hopes and dreams. This narrative out there that everything should be flipped upside down. Okay. The American system just no longer works. Every big business is out to get you. And I'm here to just continue to give you anxiety through my messaging on Instagram. You know who I'm talking about. There's a lot of them out there. Okay. They're not going to like this report from Zillow. Zillow reports that here in their October report that the mortgage rate dip that we've seen, remember this time last year, we were pushing towards and past 7%. Now we've been hovering around 6.25%. So on the zoom out, relatively speaking, on the zoom out here of reality of what's gone on the last 12 months, mortgage rates have trended down. No, 2.5 was never reality. Okay, we were never going to trend to 2.5. That's a fake market manipulated by the Fed on the money printing machine. Okay, if you took advantage of 2.5 and 3.1, good for you. You stole money. Great. That's never been the historical average. The historical average is above, the 50-year historical is above where we sit today. It's north of the 7%. It's closer to where we were trending 12 months ago. So this dip in mortgage rates that we've seen over the last 12 months has actually lifted affordability to a 3-year high. Now, we know affordability has been a significant issue. I'm not saying it's not over the last 3 years. But for me not to acknowledge that there's improvement here in the now versus where we've been over the last 3 years would be ridiculous. Now, most of these doomers online who are getting just fed, from the out, all this instant gratification feedback. Oh, you're such a pioneer you're a martyr. You're going out there and doing the people's work by just giving me all this anxiety, by just pounding big business bad, investor bad, tear it all down. Don't let anybody ever buy more than one house. Okay. By just continuing to say that and getting all these likes and comments and they're just like continuing to feed the beast. Oh man, that's working. I'm getting all this instant gratification from people who are disappointed in where things are at with this economy. I'll just keep feeding it. And it's like this never ending doom cycle. They won't acknowledge what I just did. Affordability is improving, not worsening. The free market solves these issues over time, not overnight. Tariffs are a light switch. Affordability in an economy is not. You can turn a tariff on or off. You can't turn on or off where we're at with prices and affordability. Wages need to catch up and rates need to catch up. Those two things need to happen over time. We printed near 80% of the dollars in circulation in a short period of time. Jay Powell thought that was a good idea, wondered why we had inflation. It was obvious to everybody except him until he got reappointed. Then it became obvious. So this October dip in mortgage rates has driven a 5% annual increase in both new listings and pending sales. Okay, new listings are up, inventory is up, pending sales slightly up. Okay, this inventory recovery that we're on right now, we looked at yesterday, is 17% according to Zillow's number. That's in line with Alto's from pre-pandemic averages. That's the smallest gap since March 2020. Okay. The affordability has now hit a 3-year high. Why? Because monthly mortgage payments fell from where they were last year, 1.8%. Okay. I'm not saying affordability is fixed. Don't get me confused here. Affordability is a major issue. Affordability is going to continue to be a hot topic as you get into those midterms next year. A hot topic for people, not the store and the mall hot topic, just a talking point for the customers and the connections that you have in your community locally. It's going to be a conversation in your local town hall, your city hall, your county hall. It's going to be a headline news topic. It's going to continue to be a problem, but it is improving. It is starting to get a little bit better. It's the best we've seen in 3 years. That's good news, and it should be acknowledged. Okay. Inside this report here from Zillow, we've just got an update on where they sit. What kind of market are we in? The market feels difficult for some real estate professionals, and sellers and buyers have confusion in this market. Well, it's confusing because it's wildly different from where we've been over the last 3 or 4 years, which is primarily a strong to just a generic seller's market, a strong seller's market, or just a plain seller's market. Today, we are now in a neutral market, a 50-50 coin flip market. Okay, we haven't been in a neutral market truly since 2019, the beginning of 2020. Now, I think 2020 was going to turn into a seller's market regardless. Certainly during the peak season, it was going to turn into a seller's market. Regardless of obviously what ended up happening, changing everything in 2020, creating the money printing machine that Jerome Powell unleashed onto the national and global economy, which inflated asset prices. Homes were front and center of that, created a obscenely strong seller's market because of lack of inventory. Now today, however the market feels to you, Zillow's reporting it's a neutral market. They're not alone. Realtor.com said the same thing when I was out there in Park City with them recently. No, this isn't just hey, Zillow thinks the market's neutral, but I don't like Zillow, so I'm not gonna kind of parrot what they're saying. Now everybody's saying it. On the macro, nationally, it's a neutral market. You definitely have differences. You have buyer's market where I'm sitting here today in Naples, Florida. Okay. On their index inside of this report, you've got a home value, according to their report, of north of 360,000, down 0.25% month over month on home values. For sale inventory, highest we've seen since, pre-pandemic. And really, we may enter 2026 close to the same level that we entered 2020. Remember, inventory in in 2020 didn't really start to have a significant downward impact until March, April, May, and continue to get suppressed from there. We may enter 2020, which was a neutral market, leaning sellers in some markets. We may enter 2020 at about the same inventory, or 26 rather, at the same inventory of 2020. Okay. The share that is sold above list right now, smallest we've seen in the last 5 years. Right in the mid 20 percentile. This time of year in 2021, we were up near 50% of listings selling above the list price. I know some agents love to always talk about my sales ratio. I get above list price. Well, it means that you were doing a lot of event-based pricing and you weren't willing to stick in there and test the low end range of aspirational or comp-based pricing. Like anybody that's like, I always sell 105% above list price. Well, then you always use pricing strategy of below market value, what we like to dress up as event-based pricing. Okay. The market shows us that there is tailwinds that have an impact on whether things go above in those bidding wars, where you can take something that was yesterday's comp and it pushes up even higher. Okay. And less of that is happening today. All right. There's your Zillow report. Big headline. I know we want to scroll past the doomers and all of their nonsense. I mean, I certainly do. But a lot of your clientele is getting riled up, getting a full dose right into their veins of anxiety from these people. And some of these people, some of these people you may have met before. Some of these people are licensed real estate professionals that are blaming everything on big investor, big government. I hate government, right? But that's not helpful to people. It's not helpful to people to say all your problems are somebody else's and you'll never be able to afford a home. That's the message that's being sent out there. How depressing is that? And that's not reality. I'm seeing young people buy homes today. They had to plan somebody in their corner. They had what do I need to do between now and then to become a homeowner? Oh, I have a plan. Let me follow that. I've got somebody in my corner. I've got somebody that put the plan together. Let me follow that. Okay. People are winning in this. And it's not the people that are listening to, these types of statements. So 6.25 right now, better than last year. Lowest monthly average, by the way, in more than a year on the 30-year fix. These are the highlights pushing against affordability. Typical monthly mortgage payment right now is just under $1,800. Typical U.S. home value only went up 0.1% year over year. Factor in inflation, that's a net negative on home prices. Median household is spending 32.9%, 33%, a third on their typical mortgage that's with 20% down. But guess what? That's the smallest share since August 2022. That number got near 40%. Not a good, safe number, not a responsible number. I think Dave Ramsey's numbers get close as you can to 25%. Right now, it's a third, smallest since August 2022. Okay, so the best share of income being spent on a mortgage is right now in over 3 years. This is a trend that, if continues into next year, affordability loosens up. Why are some of the projections next year pointing towards more transactions? Well, if this affordability continues to loosen up, then we get there. Affordability reached a 3-year high but remains above the 30% cost burden threshold. So Zillow's looking at a 30%. We're at 33. Ramsey certainly wants you even lower than that. Okay, he eventually wants you at like 0. Right? Wouldn't that be great? He's on the extreme side of the other end. All right, NAHB builders, how are they feeling right now? We're gauging this sentiment each and every single month on where they're at, because how they feel is a pretty good indicator of where the market might be going, how much inventory we're going to get in the future. Okay, NAHB homebuilder sentiment did tick up in October off of a long-term low that we saw in September on 32. We're back up to 37 on homebuilder sentiment as it sits here today, according to the National Association of Home Builders. So home builders feeling a little bit more positive, and the confidence in the market for newly built single-family homes actually is at 38. So it popped up another point here. October was 37. September was the low of 32. And now in November, it's moved up again to 38, well below 50, but, moving in the right direction. Current sales conditions increased 2 points to 41. Okay. Sales expectations for the next 6 months did fall to 51 points. Okay, here's a reason why that might be. And we have uncertainty in the December cut. That's one. The second reason, if we're talking about the next 6 months, we're also talking about the rest of November, December, January. Okay, if I get to February 1st and I have all of peak season ahead of me, this number is likely going to be higher. Okay, if I'm factoring in the next 6 months and I'm faced with the worst 3 months of every real estate market, November, December, January, then my sentiment and expectations probably drops, doesn't increase. That's what it did here, 3 points down to 51. Traffic of prospective buyers posted a 1 point gain to 26. Good to see a gain here with the, lowest monthly 30-year fixed in some time, as noted earlier. Okay. But ongoing challenges continue for builders, and it's kind of noted here and showing up in the sentiment, but starting to improve, or at least not go down overall as it relates to how they're thinking about the future. So that's a positive sign. We'll take the little small wins as we can get them. Mortgage applications on the headline number went down 5.2% from 1 week earlier. This is according to Mortgage Banker Association, their weekly mortgage application survey for the week ending in November the 14th. What we care about most here is the purchase index. Okay. Purchase index this time of year, I expect to move down as it did. Seasonally adjusted purchase index decreased 2% from 1 week earlier. Despite that decrease, we're looking at 26% higher than the same week a year ago. Mortgage rates did increase for 3 consecutive weeks. That's why you have that week-to-week bump down. According to Joel Kahn, MBA's Vice President, Deputy Chief Economist, application activity over the week was lower. Potential home buyers moving to the sidelines again, right? You kind of have this on-off sideline feel with buyers. Ooh, I want to move back onto the field, move back into the market, capture a year-to-date low rate. Jerome Powell comes out and blows the momentum out the door. I pull back, sit back on the sideline. Easy time of year for a buyer and or seller to find a reason to pull back. Okay. Your job just got harder. Send more quick, relevant, interesting information. Something that we talked about yesterday in the BAMX Roleplay Mastermind. You could be a part of future BAMX Roleplay Masterminds. Just jump into school.com/BAMX. Get perks like that. Get perks like Zudilio, $2,400 value. Go to school.com/BAMX. But we were talking about this yesterday. Quick, relevant, easily understandable. Not a link to a market report. No, break it down. Quick 10-second update. Quick, relevant information to customers, because long-term nurturing is the game, certainly this time of year. Mortgage applications on the year-over-year improvement, 26%, multiple now, week over week, double-digit improvements, just basically almost all year it feels like we've seen that. That's coming off of historically low mortgage application numbers. And we're kind of right back where we were in 2013, 2014, which was a low point at that time. All right. 10-year coming in today at a little bit higher than where we were yesterday at this time. 4.115 on the 10-year. And this is off of those year-to-date lows that we experienced just before the last Fed meeting. This is a high point for the last 30 days. Okay. 30-year fixed coming in yesterday, right where we've been on the last two readings. So 3 readings in a row now, according to Mortgage News Daily. The 30-year fixed daily survey comes in at 6.38. So higher than that average that has helped affordability, that 6.25 monthly average that we referenced in that Zillow report, closer to 6.5 than we are to that. And, we're just going to have to, I think this number is going to kind of be a little sticky here until we see, what exactly is going to happen at this December meeting. Nobody knows. CME Group's got it at a coin flip. CME golf tournament this weekend, right down the road here at my club, Tiburon. But CME Group has no idea. Maybe I can go over to the golf club end of this week and ask CME Group, could you give us a better indication than a 50-50 coin flip? The problem is Jerome Powell just sends out confusing messages to the market, and CME Group, as smart as they are, they're as confused as everybody. 56% chance over on Poly Market. So the money, all right, the mines are over at CME Group. The money, people's bets are moving now back towards a higher percent that there's going to be a cut. 56% chance on the money on Poly Market. There'll be a 25 basis point cut in 20 days at the December meeting. 42% are betting that there will be no change in that December meeting. Okay, what do we got here today is, and you can find this right in your calendar inside of BAMX. We got 2 things happening. One at 3 o'clock Eastern time, noon Pacific. Your Get Rich Plan, the one-page business plan for your best year ever. Myself and Sharon Srivatsa, BAM board member Sharon Srivatsa, breaking it down totally free. Use the link down below. Sign up. Eric and the BAM team are already planning on a second link because we're going to break capacity again on Zoom. So, if I'm you and I really want to see this one live, I'm getting on a little early. That's just kind of my recommendation there. BAMX members got an office hours today. Shelton Wilder, one of LA's top agents, she did 136 million last year. She did sphere of influence, past clients, agent-to-agent referrals. That was her model. She breaks it down with Chris Benjamin today at 4:30. So a look inside Shelton Wilder's playbook. Members only today, 4:30 Eastern, 1:30 Pacific time. School.com/BAMX. You can try BAMX for free for the next 7 days. Get access to that. I'm sure there'll be some reactions on the Sharon webinar inside of there too. All right. I'll see you guys today, 3 p.m. Eastern, noon Pacific on the webinar. Until then, have a great day. And of course, toodaloo.